Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Nut Closure Show. As always, I'm Scott Carson. Excited to be here with you this morning. We've got some great stuff we're going to share with you today that a lot of people, I think, overlook in the note business. It's a little niche that they know about to check on the front end for their own asset, but they often don't think about it in the long run, the long game of things. And what I'm talking about today is exactly as you see on screen there, finding and claiming tax overages on your deals or potential deals that you may not even want. And we have our special guest today. You guys all know him from our WCN family. The man, the myth, the legend, our very own Greg Arcizo. So good morning, Greg. How you doing, buddy? Down the hallway?
Yeah, I'm up and ready to go.
So before I bring Greg on to talk, because Greg's been handling this from when you started in the office for the most part, right, Greg?
One of my first tasks, actually, as an intern.
Exactly. Greg, you've been with me for almost over a year and a half now, or close? No,
almost two.
Almost 2 years, exactly. So let's do a little bit of preface there for those that are watching on Facebook Live and those that are listening to us on the podcast. Obviously, everybody knows that they've talked with us about due diligence, and we're always double checking property values, property taxes, and property title, right? Those are always the big three things. 2 out of the 3 you check on the front end, title you pull on the back end. But what's one of the things, Greg, that when we get a tape in and I throw the tape to you and you're checking taxes, what's a big red flag that you do when you're checking taxes on note deals?
Well, we're trying to see if there's if a tax sale took place in between the person that's trying to sell it to us and us.
Exactly. But what's the thing you're checking? What's the big red flag that throws it off right off the bat if we've got a spreadsheet in with borrowers' names and what do you see when it's something different?
Oh, if there's like a company name versus who the borrower's name on there. If there's it should be deeded to the borrower, and if it's deeded to an LLC or an Inc. company, then probably a tax sale happened in between.
Yeah, or even somebody else's name. If it's not the same,
or even someone else's name.
Yeah, exactly. So that's what Greg does. That's one of the things that Greg is good at doing. I mean, he's a much better just checking taxes. We all know this, but what I'm getting at is that's one of the things that we often have done, and I've been guilty of this in the past too, is if we're doing a search and we see the name change and we see that a sale took place, like, oh, it went to tax sale. That often nullifies the whole deal. Now, if you take it one step further, and we'll get to that in a second here, you'll often find money sitting out there ready to be claimed, right? So without giving away anything, Greg, you've filed how many claims for us over just the last couple months? Like 5 or 6, right?
I was going to say 5, probably.
And why don't we rattle off the amount on the tax overages that you've claimed for us?
Well, you just got one for 35, like a couple days
34.
ago. We're claiming one for 75,000. Yep. That's probably gonna take about 3 months to finish up, but it's in the works.
Yeah.
I think you've had another 30 or 31. I think a $20,000 check.
And then one for 8.
Yeah, one for 8. So it ranges 8 to 75 is what we went on so far. So
So and the beautiful thing about this stuff is most of these are on crappy assets. Greg has not seen some of these, like the one that we just got in was on an asset that was maybe worth 30. All right. And it had a huge HOA lien on it that didn't get wiped out. It was beautiful thing is when the tax. So what happens? Let's talk about kind of what happens to lead to overages, everybody. So you don't know about this is let's say it's this is what happens a lot of the time. I know what the property's worth because I've seen the property. We'll just talk about the one we just saw here. It's a condo. It needed work. It had been gutted. All right. Zillow value, you give it a value of around 75, 80,000. Okay. It needed about a good 30 grand in repairs. All right. Because the new sheetrock, new plumbing, new wiring. I mean, I had seen it. All right. We'd foreclosed on the deal. It was part of a pool of assets we bought. I made our money back on the other assets. This is just a crappy condo in a rougher area of Orlando. And lo and behold, I know the taxes are coming up. And I'm like, listen, it doesn't make any sense for me to drop 15 grand in back taxes on this thing when I'm going to come out really not making anything. So we kept an eye on it. And lo and behold, we start getting phone calls. Oh, hey. I get a phone call. Hey, there's a tax overage. And that's what you have to realize. There are companies out there. That's all they do is they watch the tax foreclosures to see if there's a tax overage. Now, what happens to tax overage? Let's say 3 years of back taxes. And this is what usually happens is once a property has 3 delinquent years of back taxes, it'll go up for a tax sale. Now, in some states, they do a tax certificate where each year's taxes are sold off for an interest rate, and tax certificate investors buy those up to get a flat return investment, and after 3 years, they can then force it going to tax foreclosure. Now, in Texas, it's a very popular aspect of investing is tax certificates, tax sales here. In Florida, they do tax certificates. Okay, well, I knew that the taxes that were owed on this one, it wasn't worth me doing. I was basically like, let's just take it for a loss and let's see what happens at the tax sale. And lo and behold, it does. Somebody sees the address, they pull a Zillow value. They can't get into the property. When they do a drive-by or a walk-around, they can't get into the property. And so it looks pretty decent. Well, what happens at most tax auctions these days, and Greg's dad, David, is an investor and has gone to tax sales for years, right, Greg?
Mm-hmm.
And he's complained about the fact that things are getting overbid at the auction, right?
Oh, yeah.
Literally stuff being bid on 80, 90 cents on the dollar doesn't make sense for real estate investors. So that's what happens with a lot of tax auctions sometimes. If it looks like it's a decent property, people overbid hoping that they'll get the asset. Sure enough, they get the asset, but they get a surprise. Okay? They can gladly have the asset. So in this situation, whatever the taxes were, I don't remember exactly, I think like $8,000 or $9,000. Somebody bid like $42,000 on this asset. All right. So what happens is the county gets paid. Somebody pays $42,000 at the auction. The county gets their $8,000, and the remaining proceeds of $34,000 and some change goes to either the owner of the property or the first lien holder. In this case, we were the first lien holder on the asset. All right. And so, Greg, you have me walk in the office with a notice. I'm like, hey, here, Greg, go fill this out.
Yeah.
Let's talk about that. I say, hey, give a call to the county here. And you call the county. What department roughly are you looking for those that don't know here?
I usually, in general, just call for the tax deeds department, and they're the ones who handle the sale. Each one's been different as far as what they title it, but in general, when I say tax deed sales, everyone generally directs me to the right phone number. And it's usually one person. Like, it's pretty personal. It's usually an attorney or a paralegal that you'll end up talking to, and each county, of course, wants different information, but in general, they want, if it's in a deed, they want the assignment chain that you have recorded, make sure it's recorded. Sometimes they've asked for allonges. It depends. And then we've actually had the most recent one, we actually foreclosed, so they had titled the deed over to us. So in that case, we submitted the deed over to the paralegal, and she, of course, examines it and makes sure everything's legit. And then for instance, the one that we're having to wait 90 days on, they're making sure that no one else comes in and claims on it too, and then they would do further research. But they just have like that 90-day period to make sure there's no claims. Once it's closed out and they process all the documents and ensure everything's correct, they'll submit the checks to us.
Exactly. So like a big point here I want to make is when you call the tax assessor's office, they're not going to have the info if it did go over tax overage. They'll just know if it went to tax sale or everything like that. They will often have to send you to the what's the department name? And I'm drawing a blank on. It's the not unclaimed funds. It's often a different department in the state or the county that handles those things. But and they can transfer. They'll give you the tax deed number and they go over there. And look, we've had asses when you buy portfolios. There's some that are just crap. You're not going to work on. It just is what it is, especially when you're buying bigger portfolios. But we've claimed on stuff that's if anything's over $500, we'll file a claim on it for the most part. Otherwise, it doesn't really make sense for the time. We get $100 overage or things like that. That doesn't really make sense for us to do. But it's one of the great things that I have done over the years too. And this is a note I want people to take in mind when you're getting spreadsheets. And oftentimes you're seeing a lot of spreadsheets and tapes that are flying around out there. Some have been recycled. The important thing to do is to jump on that. If you see it, an asset you like, and see they went to tax sale, make that one extra phone call. Pick up the phone like Greg does for us. Hey, call. Hey, you saw this one to tax sale. Is there a tax overage? And that was one of the first things that I had you do on a portfolio, an older portfolio, right, Greg?
Yeah.
Was go through and, hey, did any of these go to tax sales or tax overage? Which ones do we need to wipe off the books? Which ones do we need to file claims on? And which ones, it was checking taxes for me on a portfolio. So we were paying taxes and finding out, okay, a few of those lost, not a big deal. We count on that. And then those that had tax sales, great. We claimed on them and made money on those. If you have questions and are watching this on Facebook Live, now's the time that you want to ask the questions in the live stream. We're glad to try to answer those for you. But Greg, it's not a difficult process, right? What's the name of the form that you're filling out for those that are curious?
It's different with each county, but usually surplus claim form is the one that I've heard the most. It's just a surplus claim form. And then another just thought that came to my head, and it's happened once. Every now and then there's a time frame before it goes from the tax department to like just the general treasury of unclaimed funds. So if it's outside of like a year or 2 years and it hasn't been claimed, it could be in the treasury, just the general treasury department. So you'd have to ask them to transfer you over to that department to get a confirmation on what the funds would be. But if you have the deed and it checks out, it still would be the same process.
That's a very good point, because usually after a year, the counties will then post it to the county's unclaimed funds department. So you will often find that unclaimed funds and things like that. Like I was doing a search the other day and found something on unclaimed funds where I had a $1,400 check waiting for me from Liberty Mutual on an insurance claim from 10 years ago on a property that I fixed and flipped. And then an old cell phone bill that I'd paid too much on. So there was $60 or something sitting around there. Utility deposits, a lot of people will find, unclaimed checks and stuff like that. But this is why it's important, because we've bought assets that I knew that had gone to tax sale, but I asked for the seller of the notes, hey, throw this one in basically at nothing. It went to tax sale. I'll try to sue on the mortgage. Okay, I'll sue the borrower on the mortgage to try to get something back, knowing that there's a tax overage sitting out there of $9,000 or $15,000 or $20,000 that I can claim. That goes on now. There are a couple. There's one state that's a little honky with a tax overage where it doesn't go to the next lien holder in line. Indiana does it the first person who claims on the fund. So it could actually be the borrower on the property that you're the lender on. If they go and claim that overage before you do, they can actually have those proceeds given to them. It's a weird thing. Gene Chandler informed us of that a while back. So that's one thing you've got to act on the stuff. But that's the beautiful thing, is we have seen assets that we have bought that have had pretty good overages sitting out there that we were making money from the get-go. Right, Greg?
Yeah. Definitely.
On one asset, one of the $30,000 assets Greg was worked on, I literally had, it was down in was it Leesburg, Florida. It's an ugly piece of property. It was worth about $36,000. I think I paid $5,000 for it. It needed repair, but it wasn't worth putting the repairs in because the value and the days on the market were slow and cumbersome. So what I did is a lot of the Florida counties will list their auctions online, and you can see what stuff's selling for, see what like-minded stuff. So you can often check out to see what is getting bid up, what's not getting bid up. And that's what's beautiful about Florida. So Florida allows you to check this stuff. So I saw this one, this little asset we had, part of a bigger pool, about 35 Florida assets. I said, you know what, this isn't worth me putting repairs into. And I talked to my attorney, and I said, hey, Cameron, let's just focus on bidding up the tax sale. And he's like, oh, I can do that. So my attorney shows up before the tax auction, is bidding against people to a specific point, and then he drops off. I said, listen, anything beyond $5,000, if we can get $5,000, if we can get this thing sold tax auction for 10, 15, 20 grand, I'm fine, because I'm into this thing for $5,000. And he's like, done. So he gets it bid up to $34,000 because somebody really wanted the property. Now, the investors that paid $34,000, they were happy because I think they were buying it for the primary. I think they knew that it needed some work, but they were happy to do that. I was happy because, A, we paid the taxes to the county office, and I got a check for almost $30,000 after my attorney fees are paid, and I didn't have to put any repairs into it. So one of the things that you might want to look at is, and this is bailed me out in a couple bad assets too. I thought they were good, and I find out they're crap. Hey, just wait for the tax sale. Not only will it clean up title for you in a lot of cases if you're taking the property back, but you can, if you're in a state that has redemption time frames and it forecloses out, it'll not only clean up title, but it'll allow you to come in, and then if you need to redeem the taxes, take the property back, great. If it doesn't sell, if it does sell, you can pay this to redeem your taxes back and get the property back and clean title. I've used that in a couple of cases, kind of almost as a quiet title to clear things up. So any questions from those that are out there? Good morning, people. Good morning, Laura. Good morning, Matthew. Good morning, Mary. Good morning to a lot of people. Good morning, first-time listeners and first-time watchers. I definitely appreciate you listening. But what's the time frame for checks once you file stuff in, Greg?
About a month, I would say, after they approve it. They're really good about communication. They once it's approved, they'll say, okay, it's going to be 2 weeks because our accounting department has to process it. Or my favorite one was in Duval County. The lady that we worked with there, won't say her name, but she handled everything. Like, gave me a weekly update. Sometimes it was the update was there was no update. So, but it's still nice to hear, that they're still in the process of figuring things out.
Yeah, and we had to send paperwork on that thing on 3 times, didn't we? Because it was off or something.
There was some issues, but we got it figured out, and she was a lot of help. Yeah,
and that was the beauty of that asset is it was maybe worth 14. Okay, it's maybe worth 14 grand. Paid $4,000 for that one, and the tax overage was how much on that one? That was the 20 something.
It was a 30,000.
It was a 30. Yeah, that was a 31. So that worked out really well for a crappy little asset that needed a lot of work that wasn't worth much. So now question is, a lot of you guys are, okay, we get tapes in, what do we do? Well, the idea here is if you're getting a tape in and you're looking for it and you find this tax overage, it's not to tip your hat. Make a bid that's low, but say, listen, hey, this looks like it went to tax overage. I'll try to get, let me buy the note for a nickel on something like that. You never want to tell the seller, oh, hey, there's a $12,000 tax overage I'm going to claim. They're not going to play ball with you for the most part. We've seen that happen. So we were on a buying tour actually with Mark Gold a few years back, a Shadow Inventory Roadshow in Indiana. We were up looking at some assets. I think Granite Loan Solutions was a seller, and they didn't even know it went to tax sale. When we were up there looking at, Gene Chandler was out with us on his phone. He was like, oh, this went to tax sale, and there's a $12,000 tax overage. When some idiot, it wasn't Mark, it was somebody else. Not saying that Mark's an idiot, that came out wrong. Notified them, oh, hey, I want to buy it because there's tax sale. And then Grant was, well, no, we'll just claim that. We'll just file the paperwork out to get it back. Now, be careful. I said earlier on that you'll often run into some cases where there's companies that's all they do to track the stuff. Mm-hmm. Okay. And they'll make a phone call to you. Oh, we'll fill the paperwork out, and they'll charge you 25, 30, 40, 50% of the proceeds.
Yeah.
Paperwork. And Greg, how difficult is the paperwork?
Yeah, that's one thing. And even the counties will tell you, because they'll say, oh, I'm an attorney and I can fill this out. And the counties always respond with saying, you don't need an attorney to fill this out. Anyone can fill it out as long as you're a representative of the company or the owner of the property, you can fill the paperwork out.
Yeah, exactly. So a lot of times we've had some stuff where I'm filing, pulling up, but we just had to send in our articles of incorporation and stuff like that, showing that we're in good standing and things like that too. And that's not difficult. It's simple forms. And then do a lot of these people want you to mail the forms in, Greg, or can you scan them in or email them to them?
It varies by county. Florida seems to be pretty modern as far as just scanning them and sending them in. Some want faxes, and I'm like, that's the worst because we have to run over to FedEx to fax stuff in. But that hasn't been the case. That's only happened on 2 counties that I can think of. But in general, it's usually just over email, scanning documents and uploading them. Yeah,
exactly. And then calling for, you've got, can you scan it? Because you have on your side there different ones that you're following right there on your dry erase board.
Right now, we have one in Orlando, but it's not out of the 90-day period. But it's $32,822 what the surplus So it probably sold for like 40 in the tax sale, but after they took their tax money out of it, there's about 32 left to claim on it.
Yeah. So for those of you guys that are like, I don't have a lot of money, I'm scared. If you're if you're literally getting lists in, that's one thing that if you're doing it at nights, you can often do it pretty relatively easy by just going to Netra online and do a search and just seeing, okay, how much was their tax sale or a tax sale? And oftentimes a list how much the sale was for compared to it, or the county clerk will tell you how much it sold for, and you can often go back and see on the tax record how much was owed and see if there's a tax overage. It's a good thing because look, we have done this with I've done this with larger companies in the past where as we got lists in and we were searching through things, we saw a tax overage on counties. We contacted, hey, we'd like to buy the note on this one. If it was from a smaller, and if it was from Bank of America, Chase, Citibank, it's not worth wasting your time on. But if you're seeing smaller companies or entities or private individuals and they're unclaimed, that's an easy thing to reach out to. Say, hey, I want to buy that note, or hey, this went to tax sale. I'd like to try to buy your interest in this one for pennies on the dollar. Because, once it's gone to tax sale, yes, you can no longer, take the property back. It's now like an unsecured lien that you're trying to collect on, like a credit card debt and things like that. And there are debt buyers out there that'll pay like 5 cents on the dollar for that stuff because they're just going after judgments and other funds that the borrowers may have. Kind of like your credit card companies that buy a lot of credit card debt will do that. But, hey, it's an opportunity there. You'll see some stuff. Sometimes it's, I have bought portfolios and say, hey, throw these 5 in, for free. They went to tax sale. We'll try to claim on the stuff. And often the funds are so big, they don't have the time to check every little detail. Oh, they went to tax sale. They didn't make one. They don't have a Greg in their office to make a phone call to track some things down, right?
Yeah.
Now, when you first did this, you were a little nervous about it, right?
Yeah, just because I don't know how many people have called a county, but they won't tell you anything unless you ask for it. They're not going to give you any extra information or kind of help you. So that's actually back to the Duval County. That's how I got into a real good conversation with the lady, the paralegal there. What she actually explained the whole process to me and like told me what to ask for. And so fortunately she was just real helpful and kind of walked me through what the process looks like and what to ask for. But yeah, I've noticed that a lot of counties aren't going to give you any extra information unless you ask for it. But once you ask for it, they're definitely helpful at that point. But they're not going to say, oh, you need to do this and you need to ask for a surplus claim form, or because at first that's what I was asking. I was like, is there any paperwork we need to fill out? Well, they're not going to give you too much information. But the lady told me, oh, it's a surplus claim form in Duval County, and so I kind of go off of that now and have a kind of a script and know what to ask for and that kind of stuff.
And it's a pretty simple form. It's like a 1-page form most of the time, right?
Yeah, it's about 1 page, 2 pages.
Yeah, just filling in the entity and the dates and the APN numbers and the tax deed numbers. It's just basically a paper trail for the counties of who they issue checks to. And like if you had it in one entity, like we had one get claimed in one entity and we wanted to get paid out in a different entity, and then just make the check out to a different entity of ours. Yeah, pretty easy to do. I mean, you have different LLCs, especially I've got some older LLCs floating around there from old stuff that we want to transfer over, but it's an easy thing. I mean, Greg had to do this earlier on, asking questions and going from. I kind of guide you a little bit of the way, but every county is a little bit different. It's not that difficult to figure out though and knock out, right?
No, definitely not.
It's always a good thing when Greg walks in my office. Hey, I think I found 30 more grand.
It's never a bad day when that happens.
Never a bad day when that happens. So, little tricks that you guys can do in your local counties. So, every county does tax foreclosures or does foreclosures of some sort, especially when it comes to property taxes. It's just to check. Hey, pull a quick. It's often free to search. To bid on most tax foreclosure or auctions, you've got to prove that you don't owe the county any taxes. So if you own property, they're going to make sure your property taxes are paid up to date for the most part. And so this is the bid on that stuff. Okay. But it's free to go look to see, hey, any tax overages, anything took place that was overbid than what was owed on the taxes. And that's usually your first starting point. This isn't something I would not probably spend a lot of time on in rural counties. I would do it on your more popular counties, your bigger cities, your bigger states that have a lot of especially those that have gone up in value over the years. you see you'll see this in your higher value property, stuff that's, 70,000 or more. I mean, you'll see some tax overage in the low value assets, but most people know that low value assets aren't going to really are what they're worth and whatnot. So when you see a disparaging thing like that property you're looking at is ugly on a nice end block, that will often be a good sign for the most part in your local areas or stuff like that. But an easy way to put some extra money in your pocket at a really cheap kind of a lead aspect of things. And you never know too. This has worked for us where we called the lender, which is a smaller lender or smaller fund, and offered to buy a note. Well, it led to me getting on their buyers list for other assets. Okay. So keep that in mind as a possible aspect as a lead gen source for you. And Matthew Hell mentioned something out of Wisconsin, I believe. He says tax liens and deeds is how I got into the notes in 2013. Notes are way better though. Our notes are way better though. Yeah, exactly. Our buddy Arnie Abramson out of Dallas does a lot with Texas tax deeds and stuff like that, and has a course on it. We may actually have him on before too long on a webinar talk about that stuff. But yeah, tax liens and deeds. Because if you're buying the tax deeds, if you're the buyer of the tax deed at a county that allows you to sell the tax liens, you're getting guaranteed to get an interest rate or a decent return on your money. Sometimes it's 5%, sometimes it's up to like 18%. Okay. Any other questions or comments or Greg, any insights you want to tell people about on this stuff? And I caught you off guard with that. Greg's like, I got to be on the webinar. I got to be on the podcast today.
Yeah, you did. No, you gave me a day notice.
This is actually supposed to go out on Monday. And, Monday, of course, Monday I was at home under the weather, so we got pushed to Wednesday here. But anyway, what were you going to say?
Other than all the information's online, just you can Google it and go to the county website, like we use Netro, like you said, and they have the tax deeds, what they paid for it. If they paid $40,000 in a tax sale, there's probably surplus in it. That's $30,000 because they're going to send the property to tax sale once there's a couple $1,000s in overages. They're not going to let it get too high. They're not going to let it get $40,000 in back taxes high. So if you see a $40,000 sale, there's probably surplus claims in there. That would be
That's a really good point, Greg. That's a really good point with that stuff. So cool, guys. Any other questions? Let's see. We got questions out there, comments, text messages. Awesome. All right. Cool. Well, hey, Greg, thank you so much for doing a outstanding job on this stuff. As you know this, I get excited about it. Guys and gals, it's important. This is why checking and doing the one little extra step often pays off in the long run. I know it's disheartening because we oftentimes get a little bit of the OTSC syndrome. Oh, that's so cute, where we get excited about the house and the potential for the mod, and we get upset when we see it went to tax sale. But if you see what happened and see if there's an unclaimed funds sitting out there, it still may work in your best interest to still make an offer on it. But literally sharing with the seller, hey, this went to tax sale a year ago, went to tax sale 6 months ago. I'll still buy the defaulted note for 5 cents or 10 cents on the dollar. Can still lead to being a really, really productive task when you're looking at assets, especially in tapes that have been bounced around for a little while. You want to make sure you're always direct. That's still the most important thing. When you get a tape, make sure you're not dealing with a daisy chain and things like that. But if you can find out, especially doing a deed search and assignments, mortgage search, so most recent lender is on that aspect of thing. If that note's been sold 3 or 4 times, I guarantee that the current note holder did not get a notice that the property was going to tax sale. Okay, so that's one thing to keep in mind. We've had that happen a few times with different people tell us, no, it went to tax, it didn't go to tax sale. All right, great, awesome. Who did you sell that note to? And then we track through the assignment chains to find who they sold the note to and then buy it directly from the person who may own it or may not. So keep that in mind when you're looking at things, everybody. So guys and gals, thanks for listening. Hopefully this is helpful. It's just a little bit of an extra kind of a nugget for you in your note business. I know people are looking for assets, or looking for deals, looking for returns. And this can be a great little way to make some things happen, especially all you need is one decent one to make what most people make in a year. So other than that, guys, go out and make something happen this hump day, this Wednesday. We've got a week left. One thing I want to make a note on, everybody, is that Note Camp is literally 42 days, 42 and a half days, 43 days out from. We've got a tremendous lineup just like every time, but we've got about a third of the speakers are brand new this time around. So definitely take a look at. We're excited that Kathy Fetke is going to be speaking on there as well. Alan Calgill confirmed yesterday with me too on one of the best in the industry about raising private capital. Mark Usick, who is a great friend. You're going to really enjoy his session on the mental game. A lot of people like to talk about. Still finalizing our 2 keynote speakers, but I'm pretty stoked that I'm waiting on a couple people to get back with me to finalize their time and their dates available on that aspect. But hey guys, take advantage of it. Go to notecamp.live to get signed up. Tickets are still $197. It's still available at the early bird pricing of that. Not the extra early bird, but $197 is still pretty damn cheap for 4 days and 30 plus speakers and pure content, actions, marketing, and profit generating nuggets for your note business. Once again, April 5th through the 8th, notecamp.live. Take advantage now, and you won't regret it. So other than that, once again, Greg, thanks for joining us today, bud.
Yeah, thanks for having me.
Hey, anytime, man. And everybody, we'll see you all at the top, everybody. Bye.